All right, I think we're live. Welcome, guys. Welcome back to another live video. It's gonna be pretty interesting. You just see that everything's working fine, and it should be working fine. Just want to make sure, as always. Wonderful. That's awesome. Love it. Cool. So, guys, welcome back. We are doing a live video that was really not planned, and I was reaching out to. Well, first of all, welcome, Matt. How's it going today?
It's going well, thank you.
Wonderful, love it. So I reached out to Matt like a couple of hours before the podcast we're supposed to do, asking him if he wanted to do a live video, a live podcast, which he accepted gladly. So I'm super happy about that. We're gonna do the same interview we're supposed to do, kind of without the live. And if you have any questions, just comment in the chat, and we want to help you out as always. We have an interview game from Belgium. We'll talk about how to automate your trading strategies today, which is something Matt has done before. So, Matt, I want you to introduce yourself a little bit. Tell people what you're doing these days, a little bit of background, perhaps.
Sure. So I am a more of an entrepreneur than anything. I've created 14 companies. I've sold 4. My most recent one was at the end of December 2015. I used that capital to kind of start trading. Had a kind of a big boy account. Started trading. Kind of wandered through all the nuances of learning how to trade with a very high failure rate. But I've done a little bit of like angel investing, some real estate investing, some different things. So I kind of think of myself as a full-time investor. Certainly, I do trade full-time, both manually and I have automated systems that are more and more that I'm adding. So that's kind of a high-level overview of what I do. I started trading in 2015, so a couple years now. So.
Love it. And what really fascinates me, and this is something you wrote me in the email you sent me, that the fact that you went from trading full-time manually to trading full-time, then now with automated strategies, which I know a lot of people want to do. Like that's something that even myself, I find it really interesting, but kind of difficult to organize and really get into. So I want you to maybe tell a little bit about kind of what's your trading story. So what were you doing prior to automizing your trading strategies?
Right. So are you talking about just trading manually or prior to trading?
Yeah, so trading manually. How was that?
Sure. So I started out day trading, and it went very badly to start with, which is I'm really good at doing the first things wrong. So like figuring out what not to do. I feel like I'm an expert doing figuring out what not to do. But what I did was I started doing, I joined a couple trade rooms, chat rooms for trading. And I started just randomly doing things, trading, taking opening range breakouts and all the random strategies that you hear when you're a first newbie. So I figured out what not to do. I think I lost somewhere in the neighborhood of $50,000 the first year day trading. So okay, this isn't going to work. What else do I need to do? So I didn't sweat it. I had a big boy account. It's not the end of the world. It's not great, but I had a longer time frame, so I stuck with it. So then I kind of got more into swing trading. And what's funny is that the average person on the street has never heard of swing trading. So when I tell people I swing trade, they always say, "Oh, like day trading?" And you have to kind of explain the differences. But so what I did with swing trading, that was the majority of what I've done manually up till now. Is I like to do bullish trend following. I don't know if you're familiar with that, but the idea of a trend following trade would be a stock that's in an uptrend. It has some kind of a pullback, and then it continues higher, right? So it's not a breakout by any means. And typically, what I'm doing is I'm looking for 2-to-1 or 3-to-1 risk reward ratio. So I'm looking for those kind of stocks. I'm not like a Warren Buffett value kind of investor. I'm usually in and out in a few days, maybe a few weeks. So that's the first thing that I do manually. The other thing I do when it comes to stocks, ETFs, and options is I sell naked puts, and you have to have a bigger account to do this. And there's some risks, so I don't recommend everyone just goes and blindly does this. But the idea of finding growth stocks like Alibaba, like Shopify, like some of those other growth stocks companies that are growing 50% plus, and I'm basically giving someone a right to sell it to me at a lower price below where it is. So for example, on Shopify, this morning I was looking at it, pre-market, it was around 137, 140s, jumping around in there. And I sold a naked put around $90, which means someone is paying me to buy it from them at $90. So as you can imagine, it's kind of like I'm shorting a short option. So I'm essentially going long. And so between those two things, that's the majority of what I do.
Cool. And when was the decision for you to move from trading manually to trading with algorithms or with scripts? Was it
Right.
something yet that
Yeah.
you came across, or you decided to do that, or did you have some background coding before?
So yeah, actually, it is my most recent software company my most recent company I sold was a software company, and I've always been intrigued with software, and so I built a couple prototypes myself, and so think of it like I had a database that you can go for $600-700. You can go buy a database of all the market end of day prices. So I use something called eoddata.com, and you can go there and download the previous 20 years worth of market data. And it's basically just end of day. So you have things like the ticker symbol, the volume, the open, high, low, close, and a date. So all the data that we use now and all the data that I use for my prototype went back to January 1st, 1997. So at the time, it was roughly 21 years now worth of market data. And so I was intrigued by marrying the two things that the thing that I'm most experienced with, which is software, and trading, the thing I love, trying to marry the two together. And so generating buy and sell signals is fairly easy. You can look at certain patterns. You can kind of loop through all the data, look for stocks between $5 and up with minimal volume. You have all that data to kind of write scripts and look through. So that was kind of the easy part. The hard part was, how do you automate these orders? Like how do you send, like you and I know, you create an order, it may or may not get filled, it may be partially filled. How do you automate all that? And so I kind of went through all that. That's the process that I've gone through, but I can dig into deeper if you'd like as well.
Yeah, wonderful. So if you guys are joining us right now live, well, comment below with your question. If you have any questions for Matt, he's been through a lot of different parts and series to be able to trade with algorithms. So if you have any questions on the topic, comment in the chat. We'll make sure to answer your questions. And Matt, I'll tell you that I have like an algorithm that I created because I don't consider myself to be a great coder, but I know like the basics. So I created something for myself. I know it works. Like the backtesting stats are good, but I'm not at the point where I feel like I want to trade this, like let the computer trade that. So I'm curious to know, like, what would be the steps for someone to go through before starting to trade something live with an algorithm?
Right. So so for us, I guess if you're just brand new and you have an interest, one of the things I did, this is a year or two ago, was there's a lot of really inexpensive courses that you can take on Udemy, udemy.com.
Yeah.
And I took some courses that were 10 to 15 bucks. And they actually have some specifically for Forex that I actually took. So it basically lets you create scripts, algorithms inside of MetaTrader 4, if you and your audience are familiar with that. And so the idea is you're looking at a certain Forex pair, and you can create a script of when to buy and sell, and then run it through a back test. But assuming you already have some of the basic knowledge, like what you're saying, you already have a script. So one of the things we do is we have a specific amount of things we need to run it through. So we have like a checklist. So the first thing we need to do is run it through a back test. So our back tests are anywhere up to 21 years worth of data. And all of our trades are end of day. We're not currently doing intraday trades. We use everything that we do, buy and sell signals right now, is based on end of day data. So it's kind of essentially swing trading. We're not really day trading. That might be a future phase that we're looking at. But if your script is intraday, you need to have some kind of way to, MetaTrader 4 has some of this built in. You need a way to kind of loop over some previous time frame, whether it's 5 weeks, 5 months, 5 years, 10 years, X number of time frame. The other thing that we can do, and I don't know that MetaTrader, MetaTrader does offer like a demo account. So you have to have some kind of, you run it through a back test, but you also have to have some kind of way to test it in current market conditions. So even though we trade stocks, options, and ETFs, we let all of our algorithms run in a live current market environment. We call it simul-testing. So it's simulating what would happen in real time, even though the stock market took a little brief panic I guess off and on the past 2 weeks. We're able to see how our algorithms would perform in that behavior before we put live capital to it. So that's one of the other things we do. So we spend a lot of time writing strategies and back testing them, and that's a back and forth, on and off, over and over and over. And so one of the things that's important to us is having, making sure that our strategies can outrun and outpace our benchmark. And in our case, a benchmark would be like the S&P 500, right? So we want to eventually turn our systems into a hedge fund. It's currently operating as a family office right now, just our own capitals behind it. But we want to turn it into a hedge fund. And so in that case, we would be charging clients, investors fees. So it's important that not only do our strategies outrun the benchmarks, but they have to, on a gross level, but also as a net level, right? So minus commissions, fees, costs, and then minus our fees, still has to outrun the S&P 500. Otherwise, why would you let us invest your money if you can just go invest in the S&P and SPY in the ETF of the S&P 500 and do it on your own without fees?
Mm-hmm. Now, how do you do this? Because I guess you're gonna need some kind of like a live track record, right, of past performance. Because you cannot only look at your backtesting. I think, in my experience, it's kind of easy to create something with past data. Like you backtest something, it looks good on the chart, on the backtesting kind of chart, but it doesn't always looks good live. So how do you avoid kind of curve fitting your strategy to the past data? Is this something you've seen before?
Yeah. So it's tempting to kind of it's tempting to curve fit it so the back tests look good. In real life, it'll fall on it. The strategies fall on their face. So typically what we'll do is we do like a walk forward kind of model where we might run a single year of back tests. If it's, we'll just say trend following, right? So we're looking for stocks in uptrend, some kind of a X% pullback, and then we play the break higher. So for us, what we would do is we would do 1 year at a time to make sure it still outpaces its benchmark. Now, not every year does it outpace the benchmark, but if you're looking at a group of 3, 4, 5 years, it certainly needs to. And so what we're looking for, our internal systems that we had built specifically for us, it'll actually graph the equity curve. So if you can imagine a graph where our strategy looks like this, on a gross level, maybe a little lower on a net level minus our fees, and then what the S&P 500 would do. And so part of what we would do is we'd look at it do a 1 year at a time, kind of walk through. So imagine instead of doing one back test over 20 years, let's look at 20 back tests over 1 year each, kind of walking forward all through all the different years to see how it will perform in all different market conditions.
Mm-hmm. Yeah, love that. And we have a question from this was Robinson, who asked, "What would be advice for someone who let's say doesn't necessarily have the knowledge to code enough? What should they do? Should they hire someone to code for them? And if so, what can they look for in a good programmer? Because that can be hard to find, I think."
Yeah. So even though I've been writing software myself for 20 years, I hired a company to build our system. So and you need to be willing to put out some dollars for that. You need to keep obviously some trading capital. Don't spend all your money on an automated system. So I have seen some software tools that are kind of like a drag and drop for, I have to try to think of it. There's a group out of Australia called TradeView. They have a product called EA Lab, and you can build a drag and drop algorithm that has, in programming speak, it'd be a condition. So if a certain event is true, then do something else, right? So you can actually drag and drop different elements to build the algorithm. And then once you built the algorithm, it outputs it, and you can put it right into MetaTrader 4. So even though you don't necessarily need to know how to do programming, obviously if you're custom building things like we did, you need to have significant experience. I don't recommend the average person to do what we've done. We have obviously more experience in software development for the past 20 years. So the EA Lab is actually a really good place to start. I've looked at the demo or the videos that they have. I have not yet used it. I've been talking to them the past couple of weeks about how their systems work. But as far as hiring a programmer, so one of the things that we like to do is we like to look at previous history. So when we were hiring programmers for my other software company, we like to see, how long, show me the projects you've worked on and narrow down what part of their previous experience closely aligns with what we're wanting to do. So part of the selection process when we hired a software company in New England to build a trading platform for us was they've already done this half a dozen times for different clients, right? So we don't have to introduce them to all the trading terminology and all the basic concepts. We kind of started second base, so to speak. We don't have to start at the very beginning. They already have experience. And a lot of their developers that worked on other projects, they assigned to our project. So that's kind of a quick high level way to approach it. I certainly don't recommend you build things from scratch if you have no expertise, because you're going to be overwhelmed over your head. But like I mentioned previously, there is some decent Udemy videos that are $10, $15, $20 on trading automation. I can certainly post the ones that I've taken that I would recommend in the show notes or after the call.
Yeah, for sure. And also, someone was mentioning Kirill Eremenko, which we had on the podcast earlier. We had some great course about the EAs and stuff on Udemy. There's also this website which I came across a couple of months ago called Forex E-Advisor, which is like basically, like you were mentioning, you can put some condition and it created a script. It's not like as detailed as you would expect, so you cannot like do everything possibly. So what I did is I went with that, then I customized for myself based on like the risk I want to take and all these things, which works fine. But yeah, you do need some coding skills for sure at some point. Yeah. Now, since you use only swing strategies at the moment, is it more risky to keep things overnight, or do you see this as kind of part of the strategy?
So risk is interesting. It's one of my favorite topics to talk about, actually.
Nice.
You want to see it more risky, absolutely. But risk can work in your favor and it can work against you. So if I was to look at my previous, last year, just manually, I was up 35% in my account. We have a decent account. If I was to look at all the trades I took, a lot of what I took happened. There's gap ups in the market, certainly slightly different than Forex where you're trading around the clock. But there's a lot of gap ups. There's gap downs where a company might announce their earnings and things gap up or down depending on whether it was favorable or unfavorable. And so, yes, there's risk, but that's a two-edged sword. It can work in your favor and it can work against you. One of the reasons I stopped day trading and kind of went to swing trading was I do consulting and some other investing, and so I didn't like to have to babysit the trades. Keep moving up the stop as it goes in your favor, and every little tick against you, your heart's racing. And yes, you might have stops predefined, but when you're trading decent size, in Forex, any little pip move against you can really add up quickly. So I personally preferred the swing trading because I don't have to babysit it. I had a larger account, larger capital account to deploy, and I like my free time.
Yeah, of course. Which is one of the problems, which is also the reason why I don't necessarily day trade. I mean, yeah.
Right. And I've met plenty of traders who lecture me on taking risks overnight, and I'm perfectly fine taking risks overnight, holding things overnight. In normal traditional swing trading, I would exit before an earnings call, so that I don't have that binary event, destroys all my gains over the past X number of weeks. But if I'm trading it in a portfolio and I have a portfolio, let's say of just software companies or artificial intelligence or whatever, usually if it's in a portfolio, I do hold it over earnings. And as long as I have at least 10, 15 stocks in there, I'm not worried about something gapping down because there's others that are going to gap up. So it's almost like it's a pendulum. Overnight risk is a pendulum that swings both directions. It swings in your favor and it can swing against you. So that's kind of my preference.
Yeah, I think that's a very good answer too. I think like it's like trading before or so trading during your news. Like it's either gonna go with like for you or against you, and that's the same methodology I use for that. So
Right.
love it.
Right. Now, if
Now,
I only had two swing positions open, I would exit them. Usually the day before before their earnings call if it's a stock. Just because if you only have two, let's say they're both bad and they both go against you, that's kind of a bad position to be in. But if I have at least 10 or 15 that are in a portfolio, I don't mind holding it over earnings. But I wouldn't one-off hold it over earnings unless I had some really strong gut feeling or something that tells me that this is a good risk to take. Because I've lost significant money holding things that I thought would turn out well, and they did not on an earnings call. An earnings call, unless you have some inside information, it's kind of like we would call it a binary event, right? It's a 0 or a 1. It's a positive or a negative. And there's really no insight in to help you decide. It's not like you can look at a chart to determine whether or not, a stock chart or Forex chart to determine whether or not it's going to be a good or bad outcome.
Now, what is your plan with the business? And I really love the fact that you see this as a business, not just like a trading. It's really like a trading business. So I love that. What's the plan? Is it to kind of create strategies and then add more as you go forward, as time go by, develop more? And is there like a limit to where you want to go, or?
No, there's not a limit. So one of the things that we did was, because we wanted this product to be like the core of a hedge fund in the future. One of the things we did is we actually filed paperwork in January at the beginning of the year, and our current live strategies are building their own track record. So for just a couple $1,000s, you can create what's called an incubator fund. An incubator fund is basically like a miniature hedge fund that you cannot have any outside investors except you or your partners, two or three of us, right? So I have a track record trading, you have a track record trading, but the automation doesn't yet have its own track record. So our plans are to let that run 6 months, a year, maybe 18 months to build the track record. The automation has its own track record. So then we can go out to investors, we'll call them accredited investors, to raise capital, to put more capital behind the engine. But right now it's kind of like a family office. It's just our family accounts that we're trading through this automation. And so that's the first part of it. The second part of it is we've actually working on phase 2 right now. And phase 2 it's really super exciting. So if you think about the different kinds of market conditions, certain strategies you can deploy in certain market conditions, right? So during 2008, 2009, you probably could have shorted almost any stock and you probably would have been profitable in a few days, right? I mean, that was just, it is what it is. It was a kind of market, it wasn't a meltdown, but it was definitely bearish, right? For some extended period of time. Now, in the 2016, 2017, even 2018, you really can't short a lot of individual stocks and hold them for a long period of time because things have been so bullish. So what we built was a system. Think of it like a strategy that deploys other strategies. So we have 6, we call them SMCs, strategic market conditions. So for example, one of them is a bullish uptrend with low volatility, right? Another one is bullish uptrend with high volatility, which is kind of what we've seen over the past couple of weeks. We're still in a bullish uptrend in the general U.S. stock market. Yes, there are some pullbacks. Yes, we had some trades that we exited for loss, but we're still profitable because the way our strategies can reverse. And so we're manually doing some of this because of the strategic part. Phase 2 isn't yet live. So another strategic condition would be, so we have bullish uptrends, we have bearish downtrends, both with high and low volatility. and then we have ranging. So things that are just going sideways. So we have systems that will look at SPY and determine what is today. Today is, we have acronyms. So T+1, T-1, and those kind of correspond to one of our 6 strategic market conditions. So the idea of deploying different strategies in different market conditions is really what's got us super excited. So the idea of trying to backtest that in a standalone backtest system, you really can't do that, right? You can't, there's plenty of backtest systems that exist, but you can't say I have 12 strategies, these 3 turn on during a bullish uptrend with high volatility, and then it kind of resorts a portfolio of stocks or ETFs or options in that case in those conditions. So that's got us super excited. We're making a lot of progress on phase 2 of that right now.
That's really interesting, and that's also a question we had in the chat. So there's some things that I think are really hard to code, like either it's going to be support resistance areas, or either it's going to be kind of the trend in general. How should you go about this, or even like patterns in the market? So N shoulders pattern or whatever. Are these things that you consider in your strategies, or as you find ways to kind of go around them?
So yeah, so we are engaging a company that's building some. They're building a proof of concept for us, and the idea is everything that we have runs on Amazon's AWS. We have a small cluster, and we're building a standalone instance, and they can connect to all of our 21 years worth of data. And so they're actually building a machine learning model that we're going to kind of compare which strategies work better, some of the machine learning or the basics. So they're actually right about drawing support and resistance on an individual stock is a little more difficult. That's not like a moving average crossover like you and I might think of. That gets into more machine learning and trying to make some logical decisions. So most of our trend following, we don't actually look for support and resistance and trend following. We're just following the trend. So if you can imagine, in the U.S. here, as everyone knows, like him or not, Donald Trump won the elections in November of 2016. And there were a lot of people calling for the market's going to melt down, we're going to lose half of its value. And I actually know people who shorted huge positions overnight the night of the election results came out. And to this day, they're still short. Now, is that smart? Absolutely not. But you have to keep in mind certain things work in certain conditions, and you have to kind of follow the price action more than your own judgment. And so a very well-known investor, George Soros, lost $1 billion, and I think it was within 45 days right after the election, because he put on a huge position, short position. And as you know, the stock market continued higher and higher and higher and higher. And so for us, that's one of the ways we try to think about it. But we are working right now with a group doing some machine learning, and we're comparing their results versus ours. And we're going to work through that. If it works great, we're going to migrate to some of their Python models that they're building. Otherwise, we're going to try to see over the next 6 months which one works better.
All right, cool. And there's going to be for sure like events that you cannot plan or things that happen that you didn't expect in the market. So how do you deal with those? Because I know it can be really easy to kind of switch down everything and stop trading for a while. But how do you handle like tough event or unplanned events?
Yeah, so we have some sophisticated risk management rules. So we look at our performance on a monthly and quarterly and yearly basis. So we might be willing to take on more than average positions if, let's say, we're up 10%, 20%, X percent. Right now, today, just since January, we're up 11%. So we might be willing that early, up that much early on in the early part of the year. We might be willing to take on more positions. So we have things like we typically trade what's called an R. An R is a risk unit. And it's basically a way of thinking about taking a trade. So let's say that we might risk $5,000 on a trade. So once we lose $5,000, we exit. We have a predefined stop loss, and we exit. So all those same rules that we typically would use in swing trading are also built into this system, except it has a little bit more flexible logic in determining how many trades we can take at once, and under which conditions will we allow exceptions to those rules. How much are we willing to lose in a month? All those are predefined inside each strategy, and that kind of minimizes, if a strategy isn't working, we don't want it to continue adding losses. We want it to kind of stop. So we do, every strategy is modeled, and so we know what the max drawdown is. We know what the expected return is. Now they don't always follow that, but we have like think of it like a standard deviation of like an equity curve. And typically, if things fall outside, if we have let's say a strategy has a 16% max drawdown, just as an example, if it hits 17%, those kind of things would stop trading. Now it doesn't exit all the positions, but it stops adding positions until we can manually review those.
Mm-hmm. And how would you deal with a strategy like that? Let's just, so you reach your max drawdown. Do you scratch it? Do you kind of reevaluate it? What would you do with it?
Yeah, so we're not, just to be clear, we're not trading a single strategy. We're trading kind of, think of it like a portfolio of strategies.
Yeah.
And they're enabled, disabled at different times based on the strategic market conditions. So things that kind of go dormant, we manually review those. Maybe we need to update the model. Maybe we didn't run enough tests. Maybe it's just a fluke. Maybe so there's a whole series of things we need to do. Maybe when we ran the back test, is one of the things we've learned. When you run a back test, you got to make sure your data is correct. So we found inconsistencies in our data when we ran the original back test, right? So if you think about it, things like your data providers, who are you getting data from? So we use a bunch of different sources, but if you think about making buying and selling decisions based on your data, and what happens if your data is wrong? What happens if there's duplicates? What happens if there's data missing? All of that messes up all of your trading and all of the models that you built, because it's not an expected outcome. So to answer your question, we do manually review those. They do, they're kind of not disabled, but they stop taking trades, and we have a little pop-up inside our little portal where we create these strategies, and it just notifies us.
Love it. And what's going to be your plan once you get to the point where you want to find investors? Are you going to kind of actively search for investors, or are you going to have your track record there and wait for people to come and invest money in your hedge fund?
But yeah, so there's a couple guys that I know from a previous business relationship who have raised anywhere from $10 million to $100 million for companies. And I've talked to them and showed them some of the basics of what we're doing, and they're super excited. They're like, Matt, let's get started raising money. And I want to approach this smart. I want to be smart about this. I don't want to just go raise a whole bunch of money. What I want to do is make sure that the models work well, right? So at the end of the day, one of my favorite quotes is from Einstein. And he says, try not to become a person of success, but rather become a person of value, right? So anybody can raise money and put it in a strategy, but I don't want to use investor dollars to try to figure out what we're doing. I don't think that's good for our investors. It's not good for us, for our personal reputations. And so, yes, we will be raising money. We have some other contacts that are not professional money raisers, but have raised capital for startup companies and for financial investments in the past that we will probably utilize and reach out to. But even at the end of the day, even if we don't ever raise $1, I think this is really cool for our own family accounts, even at a minimum. So in the software world, we have, when we roll out new code, we have what's called a rollback plan, meaning let's undo and let's step backwards and start over. And so in my case, if we don't ever raise investor dollars, not even a penny, I'm perfectly fine with that. This system that we're building is going to work really well in the future. It's adaptable, it adjusts, we can add new strategies in the future. And so even if we only trade our family accounts through this, that's perfectly fine with me.
Yeah, love that. That's a good way of seeing it for sure. And it shows also the power of connection. So you've connected with people in the past within your business, and that's really helpful for sure. Love it. Now, I want to talk a little bit about your setup and the environment you have to code and look at the strategies and stuff. You showed me before your monitors. What would you recommend people to have if they want to be able to develop algorithms? Are there like must-have or keys?
So when I sold my software company, this is the iMac that I use. Now most trading platforms run on Windows, and so I've tried running Windows emulators on a Mac. It doesn't work really well, so that's why I have a little Windows laptop over here to place trades in. But I just use an iMac, and then I have which obviously runs Mac's OS, and then I have two different widescreen monitors that are tipped upright for stock charts, and the glare. I don't know if you can see that really well, but
Yeah, pretty good.
yeah. So I do use something called Trading View for my charting.
Yeah.
I use something called DAS Trader Pro for my software, and I work with Centerpoint Securities in California for the broker. We do also have, we're opening an IB Interactive Brokers account. And then I personally have like retirement accounts with TD Ameritrade, the Thinkorswim platform.
Mm-hmm. Love it. Cool.
Yeah.
We have a couple of people joining us, which is interesting. Yeah, go ahead.
This is I don't know if you can see that, but that's,
yeah.
That's the wisdom of Yoda that guides me every day.
I love it. That's awesome. We have a couple of people joining us some coders, which is great, some web coders, so that's going to be pretty interesting. A question here from NTV Game, that's pretty interesting. You said most of the work is in making strategies and testing them. So how do you come up with new ideas for strategies? Is it yourself who has ideas?
Yeah.
So go ahead on that.
So the team, Jeremy is one of the guys who's working with us on this project. And so we always have random ideas. So I was reading an investing book the other day, and they were talking about certain things, certain way of, like mean reversion. And I thought, that'd be interesting. So the ideas that we generate come from listening to podcasts, from reading books. Yeah. I read quite a bit of content on Twitter. I kind of stay away from stock twits. That's just random craziness. And so there's different sources that we use to generate ideas. The interesting thing about trying to automate a strategy is you almost have to map out what you want to do, right? So for example, there's a website called finviz.com. And FinViz has a lot of you can create a free account, and it has a lot of financial statistics based on any one stock chart: Shopify, Oracle, Amazon, Microsoft, whatever company. And so when you build a strategy, you have to think through what are the data points that I need. So if you go to FinViz, you can get some data like revenue, the PE, some of the financial ratios. But if you're building a strategy that trades those ratios, you have to have a data provider that goes back X number of years to get that. So those free websites will show you the current numbers, but what you need is some historical numbers. What were those numbers each day over a period of time? And so you need to get like a small database. And so we use a combination of, we have some databases that we've tapped into. We have some APIs that we connect to for data providers. And we do a bunch of those kind of things. But to answer your original question, the ideas for strategies come from any and everywhere. We listen to podcasts. We listen to your podcast. We listen to trend following radio. We listen with Michael Cobell. We listen to a lot of podcasts, just thinking, oh, that's interesting. I never really thought about that. Then we get to work trying to identify the data providers, write the strategies. And then sometimes a strategy, we just aren't able to get it to work. So that's fine. We might spend 30, 40, 50 hours on a strategy, and we aren't able to get it to outrun our benchmarks, and that's fine too. We don't feel like that's a wasted effort because we're not putting those strategies live and losing capital, right? So I'd rather put the front end work in to get an idea of how well it should operate before going live with real capital.
Yeah, love it. And I think inevitably, if you listen to podcasts or you watch other traders or you read books or you just talk with real people, you sure going to come across strategies. And that's something that even myself, I found strategies every single day. I don't necessarily test all of them because I don't have time for this. But yeah, easy to come with strategy ideas. And sometimes, interestingly enough, the strategies you come across or the ideas you have come in like unexpected time, like during a walk or when you don't think about it. And that's why you have to kind of note them down and work on them afterward, which is interesting.
Right.
Question from Robinson here. Do you review your automated trades? Like, do you look at your past trades? And if so, how often do you look at them?
So you're talking about when you're building a back test, or you're talking about live trades?
I guess this is going to be live. Yeah.
So we do. We have all of our systems will output like a CSV file of all the trades that we took, and we custom built a. You probably can't see it, but over here on this side is a custom tool that we built that will take a CSV file of all the open and closed trades and analyze it for us. But we typically will review live trades once at the end of the month, kind of like an end of the month closing exercise. But running those trades, so when we run a back test, we'll also output the trades that it took and run it through like a third party system that an independent system that verifies that the trades we took are the actual legitimate trades and not just, we bought Amazon at some crazy number it didn't trade at, during a certain time frame. So we kind of do that's one of the things we've learned with data is sometimes it's incorrect, and so we have an independent system that we run it through to cross reference. But to answer your question, the end of the month.
Mm-hmm. Cool, wonderful. And speaking of kind of risk management, how do you split your risk? Do you have some rules for not losing your whole capital, or how does that work? And is it the same as a kind of manual trader?
So it is. It's evolving a little bit. So each strategy has a predefined maximum number of open positions, and if you think about it, when you're building a strategy, we try to narrow the scope of what we're trying to look at. So if let's say that we want to look at any stocks or ETFs that are on the U.S. markets. That are anywhere from $5 to $200. That greatly reduces the scope of maybe 8,300 to down to maybe 2,000 stocks. And so part of the definition there is how many open trades are allowed at any one time using a single strategy. And so it's typically around 8 to 10 open trades. It varies a little bit, but part of what we do is we have these variables. Like the maximum number of open trades, we have those kind of exported, and the variables are kind of like kept on the side, and then every month we re-optimize what those variables are for the strategies as well. So we do think of it like a manual kind of thing. Obviously, if your account is 100% deployed and you're maxed out on all your margin, then obviously that would you wouldn't be able to add any more positions. But we do look at how much we're up for a month or a quarter to know whether or not we want to be a little bit more aggressive than normal.
Mm-hmm. And do you have a set percentage of risk per trade that you're willing to lose, or how does that work?
It's actually a dollar amount. It's not a percentage, but we'll just say it's a healthy level, 1 to 2% of the account.
Okay.
So we might deploy $100,000, $200,000, $300,000 trade, but we were only willing to risk an X dollar of that.
Mm-hmm. Okay, like that. If you guys have any questions for Matt, comment in the chat. We'll have time for a few more. But Matt, how can people find you if they want to connect with you or reach out after the podcast?
Yeah, sure. I'm on Twitter. I don't tweet a ton. I do read more than I tweet, but Matt DeLong 90 is my handle. I have a profile on TradingView. I can send you the link to that. We've published some free scripts in TradingView. So TradingView is like a web-based charting platform.
Yeah.
And we actually started writing some strategies in there. They have a custom programming language that we learned just for fun called Pine. And so you can build some automation, some custom strategies. And that's kind of part of our journey, is giving away some free scripts that are in there. And then I can give you my email as well.
Love that.
Yeah.
It's
Matt.DeLong. Yeah.
Yeah, go ahead. Sorry.
I was going to say it's Matt.DeLong, MATT.DeLong at paraboliccapital.co. So Matt.DeLong at paraboliccapital.co.
Sorry, yeah, it's cutting, but we'll actually put the link in the show notes for sure. And I'm curious for the TradingView thing, because I've been starting to learn Python also, but I find that backtesting on TradingView doesn't give much data. So what do you do when you want to write a script? Did you just like write script to use in the chart, or you backtested some other place before?
Yeah, so part of our journey of learning Pine was that with TradingView is that you typically can trade what you see on your chart, right? So whatever chart you're looking at, it can make these buying and selling decisions. Um, for several reasons, we decided not to use something like that because we want to have a bucket of different, like a portfolio of stocks, options, ETFs, versus a single one. But you can learn it. It's not a bad exercise. You can understand some of the basics if you're new to programming. It's actually not a bad programming language to learn as a brand new programmer. It's not overly complex. It's actually a really decent one. Funny story, I actually read through the manual. I think it was like 70 pages just in a weekend while I was waiting for my daughter at a horse show. It was raining and everything was canceled, and I'm like, oh, let me read up this. And next thing I knew, within a day or two, I was writing some basic strategies. So in Pine, you can do two things. You can do a strategy, and you can do like an indicator. So we've written some custom indicators and give those away for free as well. But we typically don't give away the good stuff. We do give away some older stuff. So.
Yeah, yeah, but yeah, indicators are really easy to code on Band. It's something I've seen for myself. The only hard part is kind of testing them and going back to do some backtesting on your own strategies.
Yeah.
But that's something that I prefer to use MetaTrader for. So
yeah. And if I could say one other thing, I think people ask what advice you give to new traders, and no one really told me this early on. I kind of figured it out, and that is, I think every trader, whether you're trading Forex, commodities, futures, whatever, stocks, I think everybody needs a system. And when I say system, I don't necessarily mean automation, but it's actually a really interesting thing when you can make a trade and do it over and over and over, like in a repetitive sense. So the idea of creating maybe a strategy or a system, something that you can duplicate over and over, it doesn't have to be automated like we're doing, but something to start with that you can kind of do it over and over through thick or thin, good or bad, up or down, and just over and over, and that kind of work the repetitiveness. And once you've got that down, there's actually for usually $1,000 or less, you can hire MQL programmers who can write, which is the MetaTrader 4 programming language. You can take your current strategy and have someone automate it to see how well it would work over time. It's actually a very interesting exercise that we've done before. So so you can kind of see what works, what doesn't work, and what conditions does your strategy work better than others, things you may not have thought of before. So I think every new trader needs to find a system and stick with it more than just a day or two, right? Because most early traders, they abandon every strategy. Oh, it didn't work today, I'm going to get a new one. Oh, it didn't work. Oh, it worked 2 days today. Okay, it didn't work the next day. Abandoned. So they're in and out of strategies so quickly. Then they're like, oh, well, I've tried every possible strategy. In trading, it doesn't work.
Yeah, true. That's a real advice for sure. We have a good question here, and I think we'll close on this one. What are your biggest issues you've experienced when programming trading strategies, or when programming then automating strategies?
Say the question again.
Yeah, I think I heard that wrong. Sorry about that. What are your biggest issues that you experience when programming then trading automated strategies?
Oh, so building them and then going live with them. I think that's what they're asking.
Yeah.
So we spend a lot of time running back tests, and part of what we've learned is that building a back test and building a strategy and running it over 20 years takes some time. Let's say it takes 20 seconds per year, right? So it does take time, but every time you tweak a strategy, you got to run it again. So it's this repetitive motion. One of the things that we built was a way to copy a strategy and then make a slight variation and to compare the two together to see what would work better. Then that greatly helps reduce this repetitive time, so that we can see that a certain variation of a strategy works better than the previous. We can discard the previous, and that kind of is like they call it a challenger contender kind of a split test or A/B test kind of a model. But The biggest thing for us is spending lots and lots of time creating strategies, running through a back test. I mean, hours and hours and hours every day. And then if we're lucky, we'll get something that at the end of a few weeks has some merit. We might need to spend some time on it, but that's the biggest challenge.
Love that. Love that. Matt, thank you so much for being on a podcast and on YouTube Live. I really appreciate it. And as I said, guys, this has been like really, really last minute that we decided to go live. So I appreciate you guys coming in. Give a like if you enjoyed the video today at the live, and we'll catch you guys pretty soon.
Thanks.
Second.